Hello, welcome back. December's market update. Tony Marlette Jr. at Brookside Tax and Financial Group. If we look at what we saw for November, a little bit out of the ordinary here for this year, markets were barely positive or negative one way or the other. If you look at it just from start to finish, there's a little more to it than that. But the S&P 500 finished just under 1% for the month. The Dow 30, the NASDAQ, and the Russell each finished negative 1%. It was the first negative month for the NASDAQ since March. And that's even with the Thanksgiving rally, true to form, that we saw in the final week, which had strong gains, and it led to us either being bumped into positive territory or limiting the damage on the downside. Obviously, investors would like to keep that momentum going, and part of that hope hinges on a rate cut from the Fed in December. Black Friday sales were strong, and they indicated some more of that continuing positive momentum going forward. And I think we've mentioned it on every market update this year. Corporate earnings continue to be strong, which is definitely adding to the tailwinds. The S&P 500 appears to be, and likely will be, on pace for our third straight double-digit earnings year, third straight year of positive returns in the double digits. And if not for 2022, we'd be on our seventh year of positive double-digit returns. We did have some data delayed due to the government shutdown, which went 43 days and ended on November 12th. But some numbers that we did see, some minor headwinds here. Unemployment, a tick above where we were last year at 4.4%. And CPI, which is the leading inflation gauge, right up around 3%. These numbers not necessarily bad, maybe sticky is the more appropriate word, and it may even underscore some of that optimism for a rate cut coming up, as the Fed, remember, has the dual mandate of maximum employment and minimum inflation. We also saw what we're looking at, or what some people are calling an AI bubble, around mid-November. Markets dropped pretty drastically. Some worried about the high valuations for AI companies and tech companies as well, and then job prospects also. I don't think it would be a surprise to anybody to say AI and tech are not going anywhere. It's just that a bubble. It created a little bit of an artificial high. That's obviously determined by fear and greed in the market. As you're getting together at your holiday parties and talking to your friends and family about your financials and referring them to us, you may be asking yourself, how does any of this affect me long term? Truthfully, it probably does not. Financial planning involves analyzing information, establishing goals, and implementing changes based on that. If you work with us, you already know that. But if you'd like to review your situation with us and give your friends and family our contact info, feel free to do so. Reference this video, and not only will your consultation be at no cost, you can pick up a copy of one of our books on retirement planning and estate planning as well. From all of us at Brookside, we thank you for working with us. We wish you and your family a Merry Christmas, a happy holiday season, and a Happy New Year. And we look forward to working with you in 2026 and beyond.